two deals in particular today that I just wanted to touch on real quick. I've got about 10 minutes. The the entire premise of like everything that we do is what makes an overseas or an out of state or a first time investor, what makes them successful, what makes them continually want to come back and build the portfolio and add another and make it so that you can help that client, help that investor see around corners, see the things that I wish I had seen when I first started buying investment properties. There's two deals today that I think really highlight that point. They're the two, one long-term rental in a single-family asset in Houston, and the other is a short-term rental, an active Airbnb, also in Houston. Now we cover the entire state. We cover DFW, Austin, San Antonio, Houston, a lot of metros in between, smaller tertiary markets like say the Killeen market, the like Waco a little bit will do from time to time, Temple, those types of smaller subsidies. But let's go ahead, dive into this a little bit. This is the Texas deal list. You can subscribe to the deal list. Go to victorstefan.com/Texas deals, or you can visit the texasdeallist.beehiiv.com. That's BEEHIIV.com, and you can subscribe right there. It's super easy. And this goes out 5 times a week, Monday to Friday, usually right around 7 a.m. So the one that got posted this morning, I want to go through and just make sure that you guys have a good read on, and you don't have to go, we're not going to go through everything, but we will go through two deals in particular. This Houston active Airbnb with proven revenue. And then down here at the bottom, I have the little tag, great deal tag, this off-market single-family rental with a tenant already in place. So what do we look for? What are the things that make a client successful? Me in particular, I'm more interested in de-risking these properties for our clients, and like what are the types of things that contribute to risk in these deals. The biggest are going to be asset quality, neighborhood quality, cash flow. Does it cash flow based on like today, the current financials, and then a vacancy risk. It doesn't matter if you can place a tenant at $4,500 a month if it's going to take you 6 months to find that tenant. It's a net effective of $2,250. So we're really looking at those four key risk variables and trying to offset them. There's other things that make a deal really nice, like for example, is there a nice walk-in equity position? Do certain permits that are hard to get, do they convey with a sale? Is there a nice financing incentive? Maybe there's a seller financing component. Maybe there's a really nice interest-only financing piece. That's going to be something that we talk about here in a little bit. So there's lots of other things beyond those four that make a deal even better. But in general, these are the four things: asset quality, neighborhood quality, cash flow, and vacancy, that we're trying to solve for at the front end to make sure that that client, that investor is set up right at the onset with a really good, high quality deal to go ahead and move forward with. Let's go ahead and dive into this one on Ariel Street in Houston. Whenever we're looking at an Airbnb, we only send out Airbnbs that are currently set up for short-term rentals. And that means that they already have active and ongoing management in place. They already have a proven revenue stream. Usually we're looking anywhere from 12 to 24 months out. We want to confirm that this revenue is actually proven and verified. So we get the Airbnb statements or the VRBO statements, or if it's a direct booking type of a setup, we get the P&Ls from the owner. So this confirmed did $101,000 in revenue in its very first year. And if you've been following this for any amount of time, you know that 2025 revenue was actually about 10 to 15% below where the 2024 revenue for comparable units was coming in at. And the 2026 projections are very close to what they were in 2024. And that's not just for this particular asset. I'm talking about all of the hundreds of Airbnbs that we review, the active verified P&Ls from these Airbnbs. That has been the trend, like almost to a T, like deal after deal after deal. There are some outliers, but in general, that's what we've been seeing. So this one, we're projecting $115,000 in revenue based off of $101,000 in revenue from 2024. So this one has the verified income. Let's take a look at the asset itself. The asset itself is in excellent condition. I would call the neighborhood. This is on just to the west side of the Astrodome, of the Medical Center, NRG, every one of these large attractors to the Houston Metro. This is only about 10 minutes from all of those main attractors. So asset quality is there, neighborhood quality is there. What was our number four or number three? Cash flow. Cash flow is obviously there. These short-term rentals, we usually don't send them out unless they have a double-digit cash on cash and they're hitting north of an 8 cap. So the cash flow is obviously there. Even with a 15% management fee, we're still hitting cash flows of $13.75 a month. This is an awesome property. And then vacancy. Vacancy is already built into this top line revenue number. So we're not gonna assume there's additional vacancy because this is already assuming, let's say, an 80% occupancy or a 20% vacancy rate. So if you don't see a vacancy in my short-term rental projections, that's why, because it's already baked into this number. So this one has very high occupancy. It has excellent cash flow, as is out of the box. It comes fully furnished. It's already permitted. It's totally turnkey. All of the furnishings convey with the deal, and it's in a great location that's going to continue to draw short-term rental guests for a long period of time. These are the exact type of things that we look for when we're looking for a short-term rental for a client to invest in, especially if they're going to be overseas or out of state. Now, anybody who watches this is going to pop open Zillow and they're going to be like, hey, Vic, I can find another property right down the street with a pool and larger square footage and more beds, and I can buy it for $475,000. Absolutely, you can. Yes, without a doubt. What do you risk going that direction? We see this happen all the time. Time with furnishing the asset, cost of furnishing the asset. When you do it this way, you're effectively financing the cost of the furnishings at a very favorable interest rate. Try and finance a couch, for 30 years. You're not going to be able to do it. So there's definitely other arguments, other ways to do it. If you're a local owner operator and you want to go out and you want to find the absolute best deal that you can, and you want to do an Airbnb conversion, awesome. That's definitely going to be the better way. You're trading time for dollars in that aspect. That is not a good way for an overseas or an out-of-state investor to get into the Airbnb market, in my opinion. You're going to spend as much paying somebody to furnish and stabilize the asset and get it online and running. And I know we do the stabilization product for overseas and out-of-state clients who call us all the time, say, hey, I bought this property. I've been having trouble getting it filled up. Can you go ahead and help support with the launch? It's like, yeah, we can. Here's how much it costs. And you might as well just buy the turnkey one, like in my opinion anyway, especially if you're going to be buying it from out of state. So I love this asset for an operator looking to get into higher revenue. Maybe they're looking to take advantage of more aggressive tax strategies. And they want something turnkey, out of the box, proven that it's as de-risked as an Airbnb deal can possibly be. So awesome one to look at. Last one here is going to be the off-market share and single-family rental. This is a long-term rental. Why do we love this type of product for an overseas or an out-of-state investor? It already has renter in place, so you eliminate that vacancy risk. It's a 2023 build home, so you eliminate tons of the asset quality risk. You don't have to worry about replacing this HVAC system as soon as you close. It's going to be in excellent condition. Location quality. Sharon has been growing ridiculously fast. This place, I think, has had on average 5.5 or 6% year over year appreciation. That's over the last decade. So in terms of location quality, highly rated elementary schools, very low crime rates. It's a master plan community. This place is insane. It's Sierra Vista. There's a couple of builders in here. We work particularly with a builder called Clay Residential. They've been great partners for all of our investors to work with. They already have management in place. Management is one of the hardest things to find in these smaller markets. So I think in terms of the 4 key risk variables: asset quality, neighborhood quality, cash flow, and vacancy risks, this one checks all of those boxes. And on top of that, you've got a really nice financing incentive, 40 years, interest only. Obviously, interest rates are going to depend on you personally as your buyer profile, but reach out about that and we can get you plugged in. It's so rare where you can find positive cash flow, good cash on cash return, a 7 cap in a good market in a major metro, And it's not a projection. This is what it actually is, right? A $299,000 strike price and rents in place already at $29.05 a month. So there's a lot of nice incentives. Reach out if you have any questions. These are the things that I look for when looking at short-term and long-term rentals. Let me know what you guys think in the comments. Subscribe to the Daily Deal List, and we can't wait to work with you.